Hey everybody, so in today's video I just wanted to give you a little bit more information on chart patterns. So we're going to look at Apple today. So if you watch some of my other videos, you'll know some of the more obvious patterns that I talked about, like a rising wedge and a falling wedge, and channels. So I'm just going to go over that briefly here. So here I'm looking at Apple. We can see things like just a channel, an upwards channel looks like this, where we're just constantly hitting the bottom and the top and zigzagging. And then when you see a break of this channel, then usually you see a down movement like this, and then sometimes you'll see a retest. And we'll try and retest the upper bound of this bottom trend line. Sometimes that doesn't always happen, and then you could see something like a double top. So they call this a double top when we hit this price action, the top, twice. So see, once, twice. And then now we start this new trend where it's a downtrend channel. And a downtrend channel is essentially when we hit the bottoms and the tops. And we do this constantly. And then you can see a breakout sometimes. And this breakout can essentially just be a bear flag. So a bear flag is when you're going down for a while, and then you see this leg up before we go into another leg down. So now you see that we're in another downtrend channel. So this is basically what a bear flag looks like. It's going down, downward trend channel, followed by a upward trend channel, followed by another downward trend channel. It doesn't always have to be a trend channel, but that's usually how I see bear flags work out. And then we could just be building another bear flag right here. And then the way that you know essentially when a bear flag is not a bear flag anymore is when we get a little bit too high. So when we start getting a little bit too high and we actually build out a higher high, then that's definitely not a bear flag anymore. And that could end up being a double top. So that's something you got to watch out for. Now, here I want to show you what a bull flag looks like. So bull flag is when we're rising like this, and then we have this downward trend channel, and then we make an upward trend channel, as you can see. So here we're going up, falling down, and then we're going back up. And then now you can see here, we're going this downward trend channel. We could have built out a bear flag, but we didn't. And then instead we just totally gapped up, and then we hit a double top, and we made this double top right here, and then we faded. So you could see something like that. Now, there's something called a accumulation and distribution. So accumulation is when you see a pretty big sell-off, and then you start seeing sideways price action, and then a breakout. Now, sometimes it's really hard to tell the difference between accumulation and distribution. So generally, you'll see accumulation a little bit more after a pretty big sell-off, and when the macros start getting a little bit better. So here we could see accumulation, and then we saw this massive run up. Macros or micros, whichever. And then distribution would look something like, let's go back here, right here. So here in this 2018 crash, we just start moving sideways for a little bit. And then finally we break this shelf of support, and then we have a serious sell-off. And then I'll show you guys a head and shoulders pattern. So right here we can see a very clear head and shoulders pattern. So this right here is the shoulder, this right here is the head, this right here is the shoulder. When you see a head and shoulders pattern, it's generally very bearish, and sometimes it's not always clear where the shoulder is going to end. So I could say that the start of the shoulder could go all the way from here. I could say it's all the way here. I could say it just closes out right here. So where the shoulder closes out kind of varies depending on how bearish things get. It could just close out all the way over here. Now I'll show you what a double bottom looks like. So a double bottom looks like this. Sometimes a double bottom could be very quick. Sometimes it could kind of work itself out in a longer trend pattern. So here we hit this bottom right here on the 21st, or on 2021 of, what is that month? October. And then notice that we hit the same area here all the way many, many months later. So here we could say that this is a double bottom right here, if we're just looking at this portion right here and this portion right here. Now, if we were to say that we're going to close this double bottom, well, this double bottom really doesn't extend until all the way out here at 156. So that's probably where it ends up being another possible head and shoulders. So let's say that we bounce off here, we have this double bottom, now we start rallying all the way up to here. Well, then in this broader pattern, then we have the shoulder right here. This whole thing was just a head. And then we have another shoulder right here. And then we could just gap all the way down to this area right here at 121. So those are some things that you got to think about. A head and shoulders isn't always just this small pattern like this right here. It could be a very, very broad pattern like this move right here, or a potential move that could happen. And then we could tank all the way down here to this 120 area. So do keep that in mind. You know, none of these patterns have to be short-lived. They could be on a much longer time frame. Now I will show you, excuse me, just kind of a broadening triangle. So here, when you see price action like this, it's a little bit unsettling because you're not really sure where this is going to go, you know? We're hitting these bottoms, but we're also hitting these tops. And, you know, this could just extend infinitely. But generally, when we start breaking under here, you know, things get a little bit hairy. Now, you can see that the market was confused. So everybody was confused because, look, we built out this doji. So nobody really knows where the market's going to go after it breaks out of this pattern here. So for a while, we built this doji. You know, we're just kind of doodling around. We're not really sure what's going on. And you see all these indecision patterns, you know. Nobody knows where they want to go. You know, bulls are confused, bears are confused. Finally, we have this rally. And then we then just build out another doji. And then we just go sideways for a little bit. Finally, we have one decisive move. Now everybody says, okay, bullish. And then we break down. And then we just rally again. So yeah, these are a little bit more difficult to navigate around just because you don't really know where it's going to go. So generally, I just wait it out, you know. Or you could try buying around these supports, but just keep a very tight stop loss if you are buying around these support areas. And if you are getting puts at these resistance areas, then, you know, that's generally a little bit safer. But, you know, do keep in mind that if it does just decide to fall a little bit and shoot right back up here, well, then you got to sell out of your puts. So here's a falling wedge. So notice that once we break out of this falling wedge, we have this decisive breakout, but at the same time you're building another doji. So people are saying, oh, I mean, is this real? Is this really happening? Is this our breakout? And then, you know, people just kind of a little bit unsure. You see this little doodling around, and then finally you see this gap up and this very, very clear breakout. Now everybody's buying now. So generally you do see these dojis when people are a little bit unsure. So that's kind of what happened here. You know, they're saying, oh, is this real? Can we believe it this time? I mean, it wasn't true over here and it wasn't true over here. I mean, now we have this final breakout. I mean, can we believe that? So everybody's a little bit unsure. And then we even saw this point where, you know, we trapped people, where we went back into this resistance line. Notice right there. And then the very next day, it just tricked a bunch of people. So imagine trading around here. You definitely got trapped. So once you got trapped right here because you thought it was a breakout, and then they sold off. You got tricked right here because, you know, you got puts, and then you thought that this thing was just going to absolutely tank all the way down here, but then instead it just rallied. So, you know, these tricks and traps definitely happen around the end of these patterns, especially when they're longer patterns. As you can see, this was, let's see, it's like a 2 month pattern. So at the end of these very long patterns, you get all these traps building out. So you just have to keep in mind, you know, like, is this a good investment? And that's when you start thinking about valuation, things of that nature. You know, is Apple a good price over here? What am I thinking about their future cash flows? Things of that nature. So let's just go back a little bit more. So yeah, I did talk about distribution here and accumulation. So yeah, distribution right there, accumulation right here. And you know, you might have thought that this was accumulation, but distribution, because notice that we were rallying here. So we were rallying, and then we came into this area, and this is a triple top. So 1, 2, 3, and then we had this breakout and then trap. So sometimes you see this, you know, you'll see a triple top, and then you'll see this breakout. It looks like a solid breakout. Now people are thinking, oh yay, we finally broke out of this, out of going sideways for a couple months. So, you know, they get excited, they start buying, and then look what happens, massive sell-off. So, yeah, distribution for you, very tricky. So I hope this video is helpful for you guys, and do check out my other videos where I talk about valuation and things of that nature. And have a good one.